Welcome back, everybody, to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy and our number one sell setup of the day. But of course, before we dive into that, we are going to take a look at two things really quickly. In Wednesday's episode, we took a look at COT data and retail sentiment. Here in our sentiment tab, we have COT data as well as retail positioning. But we're going to take a look at AAII investor sentiment and the put call ratio today. So if you want an update on COT data, and retail sentiment does change quite often, but if you want to take a look at what retail sentiment looked like on Wednesday, as well as this week's COT data, you can go back and check out Wednesday's episode. But today we're going to take a look at AAII investor sentiment as well as the put call ratio. Now, if you're unfamiliar with the AAII investor sentiment survey, this is basically a survey taken by the American Association of Individual Investors, and they ask other investors every single week if they are bullish, bearish, or neutral on the stock market over the next 6 months. So what we're looking at here is actually a chart week by week. You can see the overall sentiment from the AAII investors, whether or not they were bullish, bearish, or neutral. And this yellow line here is the difference between bullish and bearish. So the higher this yellow line is here, the higher this yellow percentage is here, the more bullish we are looking on the stock market moving forward. So what we can actually see here over the past couple of weeks is investors getting more bullish on the stock market. Now, yesterday and today on the daily chart, we have seen a little bit of a pullback on the market, which is maybe a little bit needed. A little bit of correction for a market that has been just screaming higher for so long is normal, and maybe even a little bit wanted, so that more investors can get in at a better price and then, you know, bounce off that level of support that it's heading down to before it keeps moving higher. But this week, as well as last week and the week before, investors are certainly bullish on the market and getting more and more bullish each week, it seems. So I'll let you take a look, a little bit closer of a look at this chart here if you'd like to, but I'm going to go ahead and move on into the put call ratio tab. But before we go over the put call ratio tab, I want to go over one thing with you guys really quickly. Right now, our VIP Discord service is 50% off. That's right. If you want to join our Discord community, now is the best chance to do so because it is half price right now. If you're interested in this, you can use promo code A1YT at checkout. We have our trading chat here with, Nick is answering some people's questions. We have a huge community of committed traders that are talking every single day in here, going over different trade analysis, trade ideas, sharing stuff with each other. We can also see Nick's trades, Frank's trades, as well as Ivan's trades. I believe Nick took a new trade on gold today. He was actually stopped out of his gold trade earlier for a nice profit and then re-entered off of this big red candle here, hitting support, hoping that it bounces a little bit higher, takes out these highs here and keeps on running. But you get access to some of our promotions where we partner up with other companies and you guys can get some really cool offers from them. Again, Nick's trades, Frank's trades, Ivan's trades. We have our live trading chat as well as some other stuff down here, access to our VIP webinars done by Ivan that you can only get access to from the VIP Discord. So yeah, if you're interested in joining the Discord, check out the links down in the description below, or you can go on our website a1trading.com, and right now it is 50% off with promo code A1YT. But with that, let's go ahead and jump back on into the Edge Finder. We're going to check out the put call ratio tab here, and what this is a look at the overall amount of puts compared to the overall amount of calls on the market right now. Things like the S&P 500 for overall market sentiment. So if you're unfamiliar, puts are essentially bearish bets on the stock market, calls are bullish bets. And what we're seeing right here over the past couple of days, this chart, unlike AAII, which is week by week, this chart is actually day by day. We can see the overall put call ratio, And over the past couple of days, we've been hanging out pretty comfortably in this blue area. What you're looking for here when taking a look at this chart is you don't want to see a lot of choppiness like this, where back and forth it's going between bearish sentiment and bullish sentiment. You want to see this line dip down in here and stay below in this blue section, or if this in this red section, if that's what you're looking for. But right now, for the past week or so, 2 weeks or so, we've been sitting pretty comfortably in this blue section here, meaning that there are more calls on the market right now than there are puts. So overall, it does seem like investor sentiment is pretty bullish on stocks. Now let's jump back on into top setups. I'm going to remove any neutral biases that we may have. Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today, just so we can take a look at our bullish and bearish biases. So pretty short list of bullish stuff today. It's just pound yen, Swiss yen, bonds, and gold. Gold has been our top bullish asset in the edge finder for quite some time at this point, but you know, for good reason. And then we have a pretty solid list of bearish setups here. A lot of very bearish setups. Pretty much everything compared to the Swiss franc right now is getting a bearish reading. In fact, on Wednesday's episode, we went over NZD CHF, which was our standalone most very bearish asset. I believe on Wednesday it actually had a score of -12, but CAD CHF has caught up to NZD CHF. It also has a very bearish score here, tied with a score of -11. So we'll break down CAD CHF today as well as gold. And on Wednesday we started with gold, so today I'm going to start with CAD CHF and then we'll get into gold. So I'm going to head on into data scanners. I'm going to look at Forex here, and I'm going to search for CAD CHF. And there it is. CAD CHF with that very bearish bias score of -11. COT data right now is a score of -2, and retail sentiment a score of -1. We can see here that according to COT data, or institutional trader data, they are both very heavily short from COT traders at the moment. 81.72% short of open positions are short on the Canadian dollar right now from COT traders, and the Swiss franc we see a little bit higher. 86.79% of open positions are short on the Swiss franc at the moment. The weekly change for the Canadian dollar was heavily short. We saw a lot more short positions opened up on the Canadian dollar, whereas the Swiss franc did get a tiny bit more bullish, but not by much, and it is still very heavily short from COT traders overall. Retail traders, on the other hand, day traders, are long CAD CHF. 68% of open day trader or retail trader positions are long at the moment. Seasonality is a score of -1. We can see that historically speaking, over the last 10 years averaged together, the month of June historically is a negative month for CAD CHF. Typically it does trade lower. Our trend reading right now is a score of -2, and to get a better look at that, we're going to head on into price forecast, where we can take a look at the daily chart. So here we are in there, CAD CHF, and yeah, so as we can see, this thing actually up until like today, yesterday and today, this thing had continued to move lower pretty consistently, kind of ranged here a little bit in early June, but ever since June 12th, this thing began to drop, and it was dropping pretty fast. But June 19th, June 20th, so yesterday to today, we have seen a bit of a pop in CAD CHF. However, price forecast predicts that it is going to continue to move lower. We'll finish up with our fundamentals here. We can see that inflation and employment change both had scores of 0. Interest rates, retail sales, and unemployment rate, scores of -1. GDP and manufacturing PMI, scores of -2. And then services PMI is a +2 score here. So we can take a look at our fundamental data right here. We do actually have in-depth breakdowns and records of the past GDP numbers, PMI numbers, retail sales numbers. We have full breakdowns of all of that in our fundamental sections here. This gets really in depth with all of that fundamental data, but we're keeping it simple in the scanner pages by just letting you know if it missed or beat its forecasted rate in the most recent news release. So for example, GDP-A here, A would be the first currency pair listed, so that would be the Canadian dollar. B would be the second currency listed, so that would be the Swiss franc. I know that GDP in Canada missed its last report. Whatever it was forecasted at, the Canadian dollar came in lower, it was a miss, whereas the Swiss franc came out as a beat. So Canadian dollar miss, Swiss franc beat, that gives us a score of -2, that is moving lower. Manufacturing PMI, we see the same thing. Services PMI, we see that flipped. And then retail sales, we see met expectations, so it came out as expected, whereas the Swiss franc beat expectations, so that's just a -1 score there. So that's how you read this chart here. Again, we think that this is a little bit more simplified, a little bit quicker and easier to read and understand. You know that the Canadian dollar missed its GDP expectation, the Swiss beat its GDP expectation, and that is going to tank this currency pair, fundamentally speaking. So there we go. There are the data and numbers backing up that very bearish bias -11 score for CAD CHF. Now let's dive on into gold, the most bullish asset in the Edge Finder and has been for a while. Very bullish bias, score of -10. COT data is a score of +2, and retail sentiment a score of 0. We can see here that right now COT traders are very long gold. Overall, they are 86.6% long on gold, and we saw a positive weekly change. Retail sales is pretty much 50-50. It is leaning a little bit more to the long side, but not quite enough for us to score it with a bullish metric. We want to make sure that it is clear and obvious and that the majority of the crowd really is favored one way or the other before we score something. And 56% is just 6%, above 50-50, 44%, just 6% below 50-50. So it's just a little too close for us to score it really. Seasonality, however, is a score of +1, and we can see that again in the month of June with the last 10 years averaged together, gold typically does trade higher in the month of June. Our trend reading right now is a score of +1, and gold was on a little bit of a pullback today, quite possibly yesterday too, but overall it has been trading much higher. In fact, looking at the daily chart here, we can see June 17th all the way up to today, it was trading higher. But I do know that off of bad PMI numbers that came out today in the US, gold was trading a little bit lower on the day. Finally, we can finish up with our fundamental numbers here. Now, we are looking at US numbers. This is XAU USD. Gold does not have a GDP or services PMI or anything like that backing it, but the US dollar does. And we are looking at XAU USD here. So these are all US dollar numbers. Right now, our inflation is getting a +3 score. Interest rates, GDP, manufacturing PMI, retail sales, and unemployment rate all +1 scores. Services PMI and the employment change, -1 scores. So we can see here that when it comes to the US, the forecasted GDP was 1.6%. It came out at 1.3. That was a miss. That's bad for the dollar, but good for gold. ISM services manufacturing PMI forecasted at 49.2, came out at 48.7. Again, that is a miss for the US. That is a miss for the dollar. That is good for gold. But we saw something else with services PMI. We saw a forecast of 54.8, but it actually came out at 55.1. That was a beat. That was good for the dollar, bad for gold. Inflation came out lower than expected, forecasted unchanged at 3.4%, but instead came out at 3.3%. We saw the same thing here with core CPI. So there we go. There is all the data and numbers backing up that plus 10 very bullish bias for gold. I hope you guys enjoyed this video. And remember, if you want access to the VIP Discord for 50% off, don't wait because this sale isn't going to last much longer. Go get the Discord for half price right now with promo code A1YT. You can do so by going to a1trading.com. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.